If you are a pensioner in the UK, you need to know about how HMRC pension tax bills refunds work.
Hello there, and a very warm welcome. This guide comes to you from the expert tax advisors at My Tax Accountant. We're going to be talking about UK pensions and tax, because if you've recently touched your pension pot, you really need to listen up. Why? Because HMRC might just owe you a nice chunk of money, and we're here to show you exactly how to get it back.
Right, let's get straight into it. If you're over 55 and you've taken some cash from your pension for the very first time, this is for you. Seriously, there is a very, very good chance you've been overtaxed, and we're not talking about a few quid here and there. We're talking about potentially thousands of pounds. And believe me, this isn't some rare thing that happens to a few unlucky people. Since the pension freedom rules came in, HMRC has had to repay over £1 billion. That's billion with a B. It's gone back to savers who were wrongly taxed on their first pension withdrawal. That massive figure tells you everything you need to know about how common this is.
So, how are we going to tackle this? Well, here's the plan. First, we'll look at that shock pension tax bill and figure out why on earth it happens. Then, and this is the important bit, we'll walk you through the two main ways you can claim your refund, including the exact forms you'll need. We'll also have a reality check about potential delays, touch on the new pension rules for 2026, and then finish up with your next steps.
Okay, let's start with that horrible sinking feeling. You've planned for this for years, you've put in the request to get your money, but when it finally hits your bank account, it's a lot less than you were expecting. It's a real shock to the system, and it's usually the first sign you've walked right into a very common tax trap.
So, picture this. Let's say you're a freelancer up in Manchester, and you decide to take £20,000 from your pension to finally build that dream home office. But when the money lands, you see that thousands of pounds are just gone. Your first thought is probably that your pension company has made a massive error. But here's the thing. They haven't. What's happened is you've been hit with emergency tax.
So what is actually going on here? Why does this happen? Let's break down the reason behind that shocking tax bill. This catches so many people out, but honestly, once you understand how the system works, it's surprisingly simple.
It all comes down to something called an emergency tax code. You see, when you dip into your pension for the first time, your pension provider probably doesn't have an up-to-date tax code for you from HMRC. So the law says they have to use a temporary emergency one. And here's the catch. That code makes a huge and completely incorrect assumption about how much you're going to earn. And this right here, this slide shows the whole problem in a nutshell. On the left is what you actually did. You took a single, one-off taxable payment of £10,000. But on the right is what HMRC's system thinks you're doing. It assumes you're going to take that same 10 grand every single month for the rest of the year. So it taxes you as if you're suddenly earning £120,000 a year. It's madness.
Now let's put some real numbers on that crazy assumption. Let's go back to our £20,000 withdrawal. If it was taxed correctly, your bill would be just under £1,500. But under emergency tax, where the system only gives you 1/12 of your tax-free allowance, the bill skyrockets to over £6,500. That means you've instantly overpaid by more than £5,000.
And if you're sat there feeling angry or frustrated about this, please know you're not alone. This is a well-known issue with the tax system. I mean, just look at the numbers. In a single 3-month period, HMRC had to process claims for £48 million from nearly 16,000 people. So if this has happened to you, you are absolutely right to question it and claim your money back.
Okay, enough about the problem. Let's talk about the solution. This is the practical bit, how you can get that overpaid tax back into your bank account where it belongs. And the good news is, you don't have to wait. The whole process really boils down to one simple question. That withdrawal you made, did you empty that entire pension pot, or did you just take a slice of it and leave the rest in there? Your answer to that one question decides which form you need to fill in. Right, let's look at path number 1. This is for you if you've completely emptied out a pension pot. Now, if you have other taxable income during the year, say from a job or your state pension, then you need to use Form P53Z. But if that pension money was your only taxable income for the whole tax year, then the form you want is P50Z. Simple as that. Now for path 2. This is for anyone who just took a partial withdrawal and left some money behind in the pot. Now stay with me, this next point is crucial. If you are not planning to take any more money from that specific pot in this tax year, you can claim your refund right now using Form P55. However, and this is the key bit, if you are planning to take more regular payments, you don't actually need to do anything. HMRC should automatically correct your tax code, and you'll get the overpayment back with your next withdrawal.
So you know which form to use, but what's it actually like to deal with HMRC? Let's talk about the practical side of things and, importantly, the potential for delays. You'll want to hear this part.
Here's a little tip from us, a way to potentially sidestep this whole mess. Before you take out the big lump sum you actually want, think about taking a tiny taxable withdrawal first, maybe just £100. Sure, that £100 will probably get hit with emergency tax, but what it does is it pokes HMRC into action. They'll issue a correct tax code to your pension provider. Then, a little while later, when you take out your main withdrawal, it should be taxed correctly right from the get-go. No forms, no fuss.
Now for a bit of a reality check. You can submit your form to get your money back straight away, but that doesn't mean the money will appear straight away. This quote from The Guardian really sums up the frustration a lot of people feel. HMRC is known to have some pretty hefty backlogs, and refunds can, and do, take months sometimes. The official aim is about 30 days, but it's best to be prepared for a bit of a wait.
Now, that's not all. This next change is even more important, especially if you have a larger pension pot. The government has had a major shakeup of the rules around how much you can build up in your pension and take out tax-free. So let's quickly get you up to speed.
You've probably heard of the old lifetime allowance, the LTA. It was basically a cap on the total amount you could have in all your pensions. Well, that's gone. It's been scrapped and replaced by a new system with 2 brand new allowances. And these new ones focus on just one thing, the total amount of tax-free cash you can take out.
So, the first new limit is called the lump sum allowance. For most people, this is set at £268,275. The easiest way to think of it is as your personal lifetime limit for tax-free cash from your pensions. Take out more than this in lump sums, and you'll pay income tax on the rest.
The second new limit is the lump sum and death benefit allowance. This one's set at just over £1 million. It's a wider cap that includes all the tax-free cash you take yourself, but it also covers certain tax-free lump sums that might be paid out to your family if you pass away before you reach 75.
So the crucial point is, how do you put all of this information into action? How do you take control and make absolutely sure you're not paying a penny more in tax than you legally have to? Let's pull it all together and look at the key things you need to remember. All right, let's do a quick recap. First, overpaying tax on your first pension withdrawal is incredibly common because of emergency tax codes, so don't panic if it happens. Second, you can get that money back straight away using the right form. Third, if you do nothing, don't worry, you should get it back automatically, but you'll have to wait until after the tax year ends. Fourth, be patient. HMRC can be slow. And finally, remember the rules have changed. The old lifetime allowance is gone, replaced by new limits on tax-free cash. And that just about wraps it up. Now, it is so important to remember that this has been general guidance. Everyone's situation is different, so you shouldn't rely on this as personal financial advice. For help that's properly tailored to you and your circumstances, we strongly recommend you get in touch with the experts at My Tax Accountant. You can see their details on the screen now. Thanks so much for joining us, and if you found this helpful, we'd really appreciate it if you'd subscribe for more practical guides just like this one.